Analysts at Norrenberger say investors are seeking safe havens in the fixed income market, which has led to the continued sell-off in the banking and telecom stocks in the Nigerian equities market. Now, with inflation at 21.1%, how is the market responding? Tijani Oladipupo, the head of Norrenberger Advisory Partners, joins me virtually. Thank you so much for joining us on the show today, TJ.
Thanks for having me, man. Good
Let's
to
start
see you
off really
again.
with the offsetting moods we have with regards to how the inflation figures are weighing much more pressure on the markets, really. We've seen a nosedive in terms of the yet-to-date performance. Starting off the conversation here, exacerbating pressure, how is the market faring?
Yes, thank you once again. It's been a very interesting event over the period. Of course, we saw the markets opening on a very positive note, and up till the end of Q2, we saw the market year return to date, inching up as high as 20%. Thereafter, we saw the whole reversal. As we speak, the market is barely just struggling at about 2%. If you compare that to current inflation at over 21%, that gives you about a real return in negative of close to 18-19%. It's an interesting period, like I said, and a very massive intelligent investments about investors, as we can see.
And talking about bargain hunting right now, in terms of the pattern, we're also expecting, with regards to the huge sell-off we witnessed within the banking stocks, we are expecting the MPC to meet next week, Monday and Tuesday. How much of an offset as well within the balance scheme do you think will play out? And also other subsectors where we are seeing a trading pattern in the red so far?
So interestingly, I think there is a much more interesting variables that's driving this investment decision as we speak. Take a cue, for instance, on a very interesting result by Nesto, for instance, at a dividend of 25, interim dividend of 25 naira, for instance. Even at that, you see market reaction is not significant. Bearing that, even if you go get into the banking or insurance stocks, I do not personally expect a significant shift around that direction, given that investors, like I said earlier, are becoming much more intelligent, given highly volatile variables. So that's primarily what affects influencing this decision to move away from more volatile assets like the equities market, and that's what you see panning out currently.
Let's also talk about the fate of the telecom sector as well now. We're expecting the 5G spectrum auction to hold. MTN is seeking a second take in terms of the license. Other players are also having their eyes fixed. How do you see this also propping up the telecom sector for bigger investments?
So as expected, if you see the roadmap, the MTN roadmap 5-year strategy, this is of course one of the landmark action that the company intends to do. Of course, because also look at the same for Airtel, and a number of them you will see they are all queued in the 5G direction. Of course, we expect to see a significant movement both in the bottom and top and bottom line. We expect to increase the revenue, around voice, data calls, and all of that line. However, like I mentioned earlier, while we are waiting to see how these relates to their performance as we move forward. Barring any significant shift in the direction of the market, I do not see that this will be a significant turnaround from where the market began from Q1 2022.
And now wrapping up the conversation as well, let's also take your outlook as well for the market as well. Last week we saw the whole bullish trend and so many had so much of optimism in the market, and now we are seeing the tussle between the bears and the bulls, and the bears are coming back stronger. With the Yuletide closer, what do you think might play out in the likely forecast?
Of course, you expect to see that when market is actually hitting the bottom, you will expect to see reactions, and that's what we've seen in the last couple of days. Speaking to Yuletide seasons, you will find out that what has happened between Q2 and Q3 this year has been much more volatility than usual. Of course, we know that because of the nature of the system of our own economy, the polarity of our own economy, anything is possible. It's possible. Any surprises to the market could trigger anything. But however, personally, I do not see a significant drift from what the market is currently doing.